What do investors do when they're convinced things are going back to normal? Simple. They dump the stay-at-home stocks that were working during the lockdown, as well as the drug stocks. The COVID workers and winners. Sell. I don't agree with that, though. Then they move into the money. They take all their money. I mean, these are what hedge funds do. Buy. And they go into the COVID losers that can rack up huge gains if they're really on track for a rapid V-shaped recovery. They buy stocks like Southwest Airlines very well. Disney, my trust owns that, or the cruise lines. The cruise industry was obliterated by the pandemic. But those stocks rallied anywhere from 12 to 15% today because they're big winners if the world really gets back to normal. I told you I like that Norwegian cruise. Same goes for classic cyclical stocks that thrive in a stronger economy. Think Lowe's, Boeing, Caterpillar, Chevron, all the banks. The banks in particular have been stinking up the joint for a long time. A faster recovery is fabulous for them. Fewer bad loans. Every cyclical had its day in the Sunday. The steels, the oils, real estate investment trusts that are linked to shopping malls, the freight forwarders, FedEx, and the home builders, which caught fire today for some incredibly strong new home sales for April. Really shocked people. They're supposed to be down about 10%. Actually, they were up slightly. Big part of the rally. Anything that relies on tourism screaming higher, like Estee Lauder, which moves a ton of merchandise in duty-free stores, or the casinos, which seemed dead on arrival not that long ago, and now is trying to get them to pack them in. What's happening here is extraordinary. These companies were right smack in the middle of the COVID blast zone, but they were able to access the capital markets if they needed to, thanks to the efforts of Fed Chief Jay Powell. From the moment the Fed said they would buy distressed corporate bonds by any means necessary, Powell gave business the confidence to tough it out. We've had no major public failures aside from Hertz. That was really a pre-existing balance sheet issue. The new narrative is simple. The recession's ending, and we're looking at a fabulous V-shaped recovery, which brings us to the question, is it true? I think the answer is more complicated, more nuanced. If we don't have a giant outbreak in the states that are aggressively reopening, a big if, then a V-shaped recovery is actually on the table. And if a V is on the table, then you need to own some banks and some cyclicals. But there are other possibilities, which is why I keep stressing that you need what we call a barbell portfolio here, with some recovery winners like the banks or Disney and some recession stocks like the drugs and the foods and the techs that enable you to work from home. I think tech has so many secular themes going for it that you'd be nuts to sell these stocks, especially the semis. When it comes to remote working, the genie is out of the bottle.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.